Here's the 10-year note yield ticking higher today, 154. Bryn, is that right now the most interesting thing to look at, what's happening in bond yields and what the relation could be to certain kinds of stocks?
I think it will be next year. I think it absolutely will. I think all of us were surprised that yields have stayed low, especially on the short end can't go much higher until Jay raises rates, but the long end has been so low. I think that next year, this could all change. I think it's really important for the viewers to realize, in October of 2021, let's say the Fed was buying $80 billion in treasuries. By March of 2022, that will be zero. And if you look at this year, the Fed has purchased about 40% of issuance of long-dated treasuries. That's going to go to zero next year. And so I think there can be a lot more volatility once we get past Omicron, and hopefully there's no more Greek letters behind that. And as the economy, hopefully globally, can get past this, I think there's definitely going to be front and center what is going on with the long end and how volatile, and if it does actually move meaningfully higher above the 150s, more into the 170s, we'll see. But definitely, I think that's going to be on everyone's radar.
Joe, this move in rates has certainly gotten the attention of Rick Santelli, for example, who notes it this morning, says he wouldn't be surprised to see 160 by the end of the year. We're just talking a few days there, or at least pushing towards that. How big of a story is this after the kind of run that we've just had over a 5-day stretch?
I think Rick's right. I think it is the story, actually. And I do see 10-year Treasury yields moving probably 15 to 20 basis points higher in the next couple of weeks. And that's probably going to rattle a select subset of equities, just as it did at the beginning of 2020. Let's remember what a rise in yields did then. So that clearly is the story. We're seeing a little bit of a technical breakout that's unfolding right now. It's going to rattle biotech. It's going to rattle the Cathie Wood type stocks. It's going to rattle the hyper growth stocks. And it is going to be the story until we're able to move into, hopefully, what would be the comfort of earnings season.
I mean, Pete, it's a convenient excuse, obviously, to say, hey, look at the move in the 10-year and suggest that, well, that's why stocks maybe aren't doing all that much today. You could also say, look, we just needed a breather. You raced higher over the last 5 days. I mean, the S&P 500 was up 6% in just a 5-day stretch. So a little breather, for whatever reason you want to pin it to, ain't such a bad thing.
Right. I totally agree with you, Scott. I think this is a pause and taking a breather, as you're saying. And this is something we've been watching, for many, many years now, and particularly during this pandemic where we've had some very violent moves to the upside and obviously the downside, but these violent moves to the upside, and then there's that pause. And I think that seems to make a lot of sense to me of what we're seeing right now. Obviously, we're looking at volumes, Scott, that are absolutely getting hammered to the downside. I'll give you one great example of that. In my world, the derivatives world, the first week of December, we were averaging about 50 million contracts a day. Since that time, we're averaging about 37 million contracts a day. As a matter of fact, yesterday was the lightest volume day almost of the entire year at about 28 million contracts. So gives you a little bit of an idea. I think people are comfortable where things are, where they're positioned right now, and I think they want to sit back and have a pause. We'll see if that lasts. Obviously, any kind of a violent move or a news story about Omicron or any other variants that possibly could pop up will definitely have some effects on the market. But for right now, I think people are looking at it and just looking forward to January. And like Joe said, getting back to earnings season and getting back to a little bit of this normalcy.